Well, hey man, if you want, do a little intro and kind of, tell everybody a little bit about Velocity and what you guys do. And I'll prep by saying this, and
Everybody
yourself
knows
too,
these guys,
right?
right?
Yeah, but I'll prep by saying this in every conversation we ever have with you guys, it's like ROI is the key message. It's like doesn't matter what the products are or what you're working on or doing, you focus on helping the banks make money. I don't know why it's like we've
Yeah.
all forgotten that that's the goal, right? And you guys do
Remember
it so well. So
years ago, I built a model for you guys where we plug in the numbers and the differences, and it would actually go through the ROI process all the way to capital. It was pretty cool. But
yeah.
yeah, y'all do a very good job of that.
Thank you, thank you. Yeah, it's been a key focus of ours for a very long time. And it really started with realizing the number of dormant accounts that exist at a financial institution. And so often, yeah, and we hear it throughout business. It doesn't matter what industry it is. Everybody always says, well, it's easier to keep your existing clients profitable and happy and generating revenue than it is to go out and acquire new accounts, right? And the same thing holds true if you're a bank or a credit union, in that you've spent all this time and money in acquiring all these accounts, and regardless of what the number is, it doesn't matter the size of the bank. There's always a large percentage, 30+% of accounts, DDAs, that don't even have a debit card. And when you think about that, it's pretty astounding, especially since so many so much revenue is tied to those folks that have a debit card. Let's face it, the debit card surpassed cash long ago as the #1 payment vehicle. And yet we've got a lot of these accounts that don't even have a debit card. And then, of course, when you start to segment it out, you can find that another 15 to 20% don't even use the debit card that they have.
Right.
So then what you wind up with is this upside down kind of model, the old 80-20 rule, where 20% of your accounts are generating 80% of your revenue. So we really like to focus on the other 80% and what can we do to get them to generate revenue and become profitable, because the ones that are generating revenue, the ones that are using their debit card, they're generating 10 times the amount of revenue than those that are dormant.
You bet.
That's a key part of what we focus on in the retail side.
I love it.
Yeah, I've seen a lot of the cool stuff. I mean, cool, the way they break down the clients, and they've got like different paths of profitability for each segment or each type of client, what the options ought to be. I mean, it's really well done.
Yep.
Thank you. Thank you. Yeah, it's a key part of it, because once you start segmenting out all the different accounts, you can very surgically attack them with campaigns to get them to do X, Y, or Z, no matter what it is, right?
Change that
And
behavior.
yeah, yeah, exactly.
Something you said is funny. It's like everybody's like, hey, it's a lot easier to keep your existing accounts than it is to go get new ones. And it's like, but it's damned hard to get those dormant guys to do the right thing that you want them to do. And it's an art. It's not just something that it's like, oh gosh, I will do that. It's a lot harder than it sounds.
Right.
It is, and interestingly enough, we found the art, if you will, and working in healthcare. Blue Cross Blue Shield in North Carolina came to us long time ago, and they wanted some help in figuring out how to get policyholders active and what they could do to reduce the healthcare costs. And they had these ideas of, all right, well, if we could get people to lose 10% of their body weight over the next X number of months, that would be great. And our founder was like, that's not going to work. You can't set 6-month long goals. People aren't going to do it. You have to set very short-term, easy to achieve goals, and you've got to reward your customer, whoever it is you're trying to get them the behavior change, with something that makes it worthwhile. So that's exactly what we do in the financial industry is we ask somebody who has a card but's not using it, just use it 5 times next month. And if you do, we're going to give you a $10 gift card. And so now you've got a very, very achievable behavior type change, and you're incenting them for it. And then the more they do it, the more it becomes habit. You continue to incent, you continue to ratchet it up until suddenly these folks, they're using their card 25, 30 times a month, and they don't even think about it anymore. It's top of wallet.
This is perfect. And I think that one of the things that everybody has always thought about this, how we engage these dormant customers, get them really to be active. It's a stepping stone. Not really. It's kind of like you got a couple little baby steps, and like anything else, whether it's your dog or your cat or your buddies or yourself, it becomes like a habit. I've changed myself. Well, I brush my teeth with my right hand, you know, and it's really easy once people begin to start doing these things. Then they go to their wallet every single time, pull out that debit card without even thinking about it. And so we're trying to achieve a 5 stripe a month, right? And you end up with 25.
You bet. Every time.
Yeah, exactly.
Yeah, I think it's interesting if you look at that whole side and, you know, some of the other things you guys have done. I'm thinking about some of the surrounding products, right? It's sort of like, let's get everybody fired up and rolling. And then once you get engaged customers, you get into basically a needs analysis of other areas of their lives that you could pick up, right? And especially, I love some of the business focuses, right? You know, I love business lending and some of the topics you guys have done there. There's these interesting pockets and places that, I mean, we could talk about profitability. You have to look at it like these are areas that are underserved in your own base that you could really pick up profitability. And actually, it's awesome for the customer too, right? Big difference.
Can I ask you a question? Do you guys, do most of your clients, are they like clients for life? Or do you have like people need to engage with you that haven't, and then all of a sudden it's a cool thing, and then maybe re-engage with you every couple of years? How does it work with you guys?
It's really our clients are partners, and they're partners for a very long time. We've got some really incredible clients that have been with us for as long as I've been here, almost 20 years. I mean, that's really what we focus on, and I love it when our clients refer to us as, hey, and this is our partner velocity, right? We really feel like we're able to succeed together when we're working as partners, and that term is so overused, and not just this industry, but many industries. A lot of people throw the term out. Maybe it's not as genuine as we do. Look, there's no question we have clients, and there's no question that we're vendors to some of those clients, but we strive to be their partner. We want to be their partner in helping them figure out whatever objective it is that they're trying to achieve. And those objectives change fast.
It's a good
it's right. And you've got to be there for them when those strategic initiatives evolve.
Right.
And sometimes they evolve not at the desire of the financial institution. It's forced upon them by a regulation change.
Right?
That was perfect. Nailed it. Yes.
It's forced upon them. I mean, COVID's a perfect example, but regulation is a big part of it, and sometimes they just get whacked on the head, and if there's nobody out there like a Velocity or you guys or whoever it is, it's really hard for them to overcome those things.
That's a great point. I've kind of come to this really interesting thing of, if you hear bankers, I think by and large would totally agree with Mike Explainer, right?
Yeah.
Trying to get away from vendor relationships and be looking for partners. Likewise, I mean, look, there's tactical things that we all do. You know, hey, I mean, a grocery store delivery occasionally. If you're in a jam on a Saturday, okay, right? But there's other things that are, you know, strategic partnerships, and they tend to be more important. Okay. Banks talk so down on that sort of very icky vendor relationship, but think about what a lot of banks are offering. are banks not kind of a vendor just slinging chartered banking stuff a lot of times? And do they really have a true relationship and partnership with their customers? I know it's the talk track of all of us, right?
Mhm.
But it doesn't look like it did for any of us 10 years ago, being so much more digital, right? And I think that's the focal point problem that we're all looking at. And to Mike's point, how do we embed and ingrain lots and lots of tactical things in a strategic way over a period of time, and something that's in a shifting landscape that is a lot more like a partnership with a customer?
Yeah, good communication back and forth.
Right. You bet.
I've got clients. I know my numbers top 5. They'll call 7 a.m. in the morning. Mike, I wanted to catch you before you got to the office.
Yep.
This may not be in your wheelhouse, but I'm looking for X, Y, or Z. Do you guys do it? I love that. I love it, because even if we, if it's not an area that we can help them with, look, through all of our networks of working with other fintechs, I can put them in touch with a best in class provider to help meet their need.
And you're saying exactly what needs to be is more people need to be this way, and more. All of a sudden, the bankers, they don't see you as, okay, it's a negotiation with a vendor, and oh no, man, it's like, hey, he's my buddy. Let me see if I can solve a problem together.
I don't have to worry if this guy's screwing me. I've known him for years.
Right.
I was family. You know what I mean? And that's been community banking forever. And I think we've just, I don't think we all noticed, but we lost a little bit of that. And certainly due to COVID, and for good reason.
Bad sales
You get
people,
back.
text people talking about their roadmap, and
But I mean, negotiate with me, right? I'll be the first guy to tell you I don't want the best price. I maybe don't want to be your highest price customer, but I want to be important to you, right? Likewise, same thing the other way. I'm happy to do what needs to be done to, fit a number. But likewise, if you're just looking for the cheapest thing, I don't want to be cheap.
There's literally life lessons in this conversation.
Right, right.
Well, look, any of us, what do we want most of all? It doesn't matter what type of widget we're shopping for. We want value. That's what each of us are looking for. We're looking for the best possible value that we can get, right? We're paying X and we expect Y. And that expectation probably goes up or down as the amount of as the cost does too, right?
You bet. Well, and think about this. Okay, if I've got people that I'm serving here, and I'm talking to you, Sam, help me to serve my people, and you're going to sit between me and my people that I'm trying to serve me to do it better.
That's important.
This is exactly where you want to spend your money, right?
Well,
not the place to go cheap.
What Mike's saying that Velocity does, their value to banks is that they help them provide value to their customers.
Right.
It's perfect, right?
Imagine that, right?
Yeah.
Well, and everybody, it's a new thing today. We're gonna, take a look at your data and see what your customer is about, and then we'll tell you some new stuff. And it's like, Mike's been doing this forever.
You bet. Yeah.
And look, it's no surprise that deposits and account acquisition is a hot topic right now, right?
Yes.
So it's no better time to really refocus on that account re-engagement and getting those folks
That's why
to remember who you are and why they chose you. Yeah.
That's kind of where I'd like to dig in a little bit, man, just to get your brain and your feel. I mean, I've been around all this a long time. Both of you guys have seen a ton. I mean, the narratives out there, there's a lot of different talk tracks at the moment and a lot of different, people going in different directions. How are you guys thinking about it? Right? Just watching the times. I mean, are you having war room meetings and freaking out, or, what are your thoughts on just the overview of the industry at the moment and how you fit into it?
Yeah, from our perspective, there's not a nervousness of a crisis from a Velocity perspective. We've had a banner first almost 5 months now too. It's just been incredible. Look, there's probably still a number of financial institutions that have certain things that have to get addressed or compensated for, etc. I don't think it's huge based on the ones that I'm speaking to. The ones that are diversified, seem to be in the best shape of all, and those that are not, they seem to be running around trying to figure out exactly how they're going to diversify themselves in the short period, and what that means to their longer term strategy. But the market itself is not something that scares us. Yes, there's all this noise out there, but isn't there always noise? There's always noise.
The only thing that scares me, right?
I think
so we just got to work through it, and that's what we do. And it doesn't matter, last year, this time, actually, even earlier in the year, the big noise was around overdraft going away, and how all the big banks were changing their NSF fees. And as you started to filter out the noise, you could really come down and figure out, okay, well, all the big banks that changed their process and no longer started charging NSF fees, or were not going to allow any overdraft, that was such a tiny portion of their revenue already. Making a statement like that didn't really do much to their bottom line or their top line, but yet it drove a stake through community banks and credit unions kind of outlook, because of the domino effect it has.
Yeah,
that was
it's like
right there.
If you're ever having a really good day, turn on the news. You know what I mean? Or go to your LinkedIn feed. We're coming to the meeting. I'm like, our numbers are great, and I look at LinkedIn and I'm like, oh, we got 12 months and we're dead.
Yeah. So a lot. You just got to filter the noise appropriately.
There's a lot of things. I remember the Civil War, and I remember Pearl Harbor.
Did you fight in the Civil War?
No, I was too young for that. But you watch a lot of things, and when you go through 20 years of zero interest rates, and there's so many people that are in their, no hard feelings.
I was just saying, me
in your prime, man, right now, that they didn't experience a lot of these things that used to be kind of like cycles, right? So people, and I'm not saying you're an old guy here, but I am, but
we know it.
Professionals, we're pros, man. Seen these things, we're prepared for this. This isn't something new. And then the new kid on the block says, "Hey, man, trust me, right? Not so much. I'm not really sure about you, but I am about you, right?" And this is where I think a lot of bankers, if you've got a company like Velocity, been around a long time, these guys are badasses. You don't stick around a long time through these cycles that we live through if you're not pretty damn good at what you do. And so, okay, we've got this, whether you want to call it a crisis or a deposit risk concentration or whatever. It's like, okay, yeah, I know what to do. And everybody else is like, hey, I got a solution. And it's like, you're like, this is an easy one, man. So, and I think a lot of this, just, my 2 cents on what's up, right? Deposit concentration risk. Be careful, because we have ag farmers, ag loans. We've got all kinds of people that have deposit concentration. That's not a bad thing.
Right.
So if that becomes a victimization moment in banking, we got a bad problem.
Can we just laugh for a minute that the idea, what if my bank went out and we just killed it, right? I got nothing but like violently rich people. That's a bad thing.
If you have too many rich people and you invest in
way too much money,
you've had it.
What? And you buy government. Yeah. Jeez. It's a weird thing, Things are different.
But man, what you guys really do, I think, is be a good buddy that can sit here and analyze everything in your bank, see what's going on. And bankers, if you guys have not worked with them before, you need to do this. They'll take your client base, really, and analyze where you need to zig and zag and what you have to offer, and how to posture different things that you already have.
Make more money.
Is that a good way to say it, Mike?
It is. And truly, we do that in kind of a turnkey manner, so that you once implemented, you turn it on, and things run. It doesn't take an army of people, or even a small number of people to manage, tweak, change, operate, or anything else. We've got a team of client service managers and tech folks that data scientists that look at all of this each and every day and make recommendations back to our clients about what changes we might need to make and when. And I think that's one of the things that makes it so sticky for our clients. Is truly, it's like they're implementing not just a piece of software, but a complete component within the financial institution that owns and operates account engagement and re-engagement without them having to worry about it. It just runs.
Real program. You bet. Yep.
Well, I mean, I've known these guys forever, and we've done business together for a long, long time. And I am very, very reluctant to ever say I trust these guys. These are the good. You will not get hurt working with these people. This is going to be a good thing for you. Yeah, I full-throatedly endorse the hell out of everything that y'all do. And I think everybody is kind of tuning into this now, to where you're saying we really ought to analyze the inside of our bank, not necessarily outside all the time. Yeah, you may suck at outside marketing, but there's a whole lot you can do internally. And you've got people like Mike here that can really knock it out of the park for you.
Yeah.
That means a lot, Dave. Thank you very much. Really does.
Hey man, last final thoughts. Anything on your mind? Just where's your head at these days? What are you thinking about?
Yeah, well, my head's always thinking about M&A. You know, I lead M&A and new products.
Football.
And those go kind of hand in hand together, right? Because sometimes new products are thought up as a result of startups that are out there, and thinking up something new that perhaps we haven't. And that may evolve into a new feature or functionality that we deliver, or it may evolve into something in which we acquire and embed in our product suite. So I'm always out there at different events looking for companies that have created the next cool thing that creates revenue and value for a financial institution that aligns and complements with what we provide.
That's so cool.
We're always all shopping, right? Either because we're afraid of it or we want to buy it and partner with it, right?
Yeah. If I had something to say, I mean, as far as, again, back to living these cycles, if things get tight, things get tough, commercial real estate, well, okay, and then we're going to have the well capitalized, the undercapitalized, and guess what? We're going to have a bunch of mergers. Okay. I just beg you guys, bankers out there, take a look at different companies. It's not like the old days where everything costs and it doesn't deliver. Don't sell your bank before you've given people like Mike a call or given us a call. I mean, let us help you figure these things out. And then if you're like, I can't do this, then sell your bank to a FinTech, not a bank. The bank charters. They're really hard to come by.
You bet.
And there's a lot of people out there. This should clue you in. Every tech person out there is trying to buy a bank,
right?
Which embedded finance, FinTech, bass banking. Think about this before you sell your bank and call people like Mike. And let's see what we can do.
Charter's valuable. Love it.
Yeah.
Hey, thanks a bunch, man. Enjoyed having the conversation and everything, and love you guys and appreciate everything that you do. And I mean, last thing I think is important, you guys are super supportive of just the whole community and industry. Yeah. That needs to be noted. There's not that many, right, that for years and years are big supporters.
Community banking right there.
Thing, man.
That's right. Yeah, exactly. That's at the center of what we believe in is community banking and supporting them. They need it in order to remain relevant in these changing times. They need all the help that we can provide. And thank you to you guys too.
Awesome. Great. We'll catch you next time, buddy.
All right. See ya.
See you. Bye.